Sunday, May the 11th, Mother's Day. Happy Mother's Day to you moms. This will be a quick video covering the markets and a quick watch list. This is a chart of the comp, NASDAQ composite, and what I wanted to point out here is a couple of things. Number one, we've been in this uptrend since 2009. We are still long-term bullish. However, short-term, we have pulled back to the 40-period moving average. This is a weekly chart. And we currently are showing something of a bear flag. Now, we could bounce off of this level, but what I'm watching currently is MACD, which isn't showing signs of turning just yet. And momentum has really picked up. Looking at a chart of the Russell with the same mindset, we have not closed below the 40-period moving average on the weekly since 2012. Note MACD is really starting to pick up steam with momentum pointing to the downside. Now, if we want to see the markets moving higher, we would like the small caps and tech to take the lead. Now, the S&P 500 is looking somewhat better, with MACD drifting lower, having not turned up yet, but looks like it could possibly. We put in a doji on Friday. We've put in dojis before, nothing that alarming, except that if you overlay rate of change, you can see that we are drifting lower, which isn't unusual, but something to consider if you're thinking about taking the S&P, the spiders, for a long trade. Looks like we're building a top here, and we'll build on that theme shortly. Now, if you're bullish, you want to see prices take off to the upside on higher volume. Now, this is a chart of the 20-year bond, TLT. So what we can see here is TLT is right at a trend line. And what we can see here is TLT is right at this trend line and had some resistance last week. This is the weekly chart with a 2040 set up, and drawing in a horizontal resistance level, we can see the same thing. However, we have a bullish setup with regard to the moving averages, so it's more than likely that with MACD continuing to move higher, that we could flag here and move higher. Looking at an Ichimoku chart, we're in a bullish setup as well, with Kumo down below us and Chico above price. We closed right near Tikin-sen, with Kijun-sen below and is pointing higher. This is a chart of the ARCA Institutional Index, the top 75 stocks that institutions as a whole typically have as core positions in their portfolios. We can see the same thing as with the S&P 500. We're testing these highs. However, this indicator above is the rate of change. Rate of change is dropping. Now, there's no reason why this can't break out and move to the upside if you're bullish. And if you're bearish, you want to see this continue to move to the downside. MACDs continue to drift lower, and prices are moving sideways. So if you're of the mindset that tops typically take time, then you would expect to see this roll over at some point if the Russell and the NASDAQ composite don't turn quickly and move higher. With respect to the consumer staples outperforming, I'm leaning towards, and have been leaning towards, continued weakness into the summer, which seasonally is typical with bonds moving higher. This is a chart of the consumer staples versus the consumer discretionary, or the cyclical sector. In an improving market, the cyclicals typically outperform the consumer staples. As you can see here, from the summer of 2012 through March, consumer staples underperformed cyclicals because everyone was saying that the economy is getting better. Now, as we're at the top, we can see that the reverse is the case, where consumer staples are now outperforming the cyclicals. Until this trend changes, as John Murphy pointed out over at stockcharts.com, we can expect the markets to have some difficulty here at highs. What this is reflecting is a positioning in defensive sectors. Let's take a look at the sectors. These are the sectors in a candle glance format with XLY. As we mentioned before, cyclicals continue to move lower, trading right around its 20-period moving average, the blue line, and below its 50-period moving average. That's the other thing. A good percentage of stocks on the S&P 500 are trading below their 50-period moving average. You want to see that number increase if you're bullish the markets. Banks are moving lower. We know that biotech has been underperforming down below its 20-period moving average, forming a bear flag here on the weekly. This is the 2040, right at a previous area of support and resistance. If this breaks lower, you can expect to see NASDAQ continue to move lower as well. The steel index moving sideways, IYT and IYR. IYR is outperforming. The REITs are doing really well, and the real estate shares. IYT looks okay. It's moving higher on a weekly basis. No change there. So you'd be looking at transports, shipping, and rails and trucks, like JB Hunt, for example. Financials should be doing better if REITs continue to move higher, but the big money center banks are holding this back. XLB and XLI, as we pointed out, continue to do well. Let's take a look at XLY. That's performing well. XLB, you want to be looking at sectors. We'll go into the components in just a second. XLE had been a leader for some time, and we see some topping candles on the weekly here. So we might see some weakness on XLE. XLP, we talked about consumer staples continue to outperform, which is showing defensive postures in institutions going into the summer seasonality. And XLV is moving sideways with a lower high on the weekly. So what we could do is look at the sectors. These are sector charts with the components set up, and if we look at a candle glance of the material sector, we can see what's performing, like Ball Corp, and what's underperforming, all these stocks that are down below their 50-period moving average and 20-period moving averages. You can see that more stocks are performing than underperforming in the sector. If we go to energy, you can see a different picture. All these stocks, for the most part, have been above their 20-period moving average and are now testing the same. There are a couple here in this sector that are down below the 50 period. Looking at financials, same thing. We can see a lot of these stocks are doing okay. Some are below their 50 period moving average. PNC. Let's take a look at industrials, which is doing okay as well. We see some flags here. 3M, Mikey's been trading this one. Continues to hug the 10-period moving average, the blue line, and the upper Bollinger Band. Deere, Caterpillar, both of these I noted were doing okay. Continue to grind higher. We have a MACD cross. I'm not sure when these companies report or if they've reported already. John Deere at highs, upper Bollinger Band, putting in a little bit of a flag here. MACD moving sideways, some volume. Fastenal, FedEx, General Dynamics. We're testing highs here, multiple top. MACD's drifting higher. Joy Global came down and tested its 50-period moving average, the green line. This looks kind of weak. MACD is turning somewhat. So if you trade with the 200 period moving flat for the most part, you trade the upper and lower Bollinger Bands. We moved outside the Bollinger Bands on Tuesday and Wednesday and are moving away from it. Not a stock that I normally trade, but with industrials starting to look a little bit better, maybe that's a sector that we can take some trades off of. Technology, I would expect this to be weak, and you can see most of these stocks are down below their 50 and 20 period moving averages. So you want to see this reverse. You want to see the trends change if you want to be bullish the NASDAQ composite or the Russell. You want to see these names start to move higher and break trend. You see a crossover here on Electronic Arts. Google down below its 20 and 50 in a very bearish pattern with Keltner channel pointing lower. You would be trading any moves to the upside where you see a topping candle and taking those short. So First Solar continued to move lower, building a channel here, and Keltner channel is starting to turn down, so that's something I'd be interested in currently. Frontier Communications, nice pattern here, broke above recent highs. Looks like we're going to take out this level with respect to recent highs. There's nothing up here resisting volume, so keep an eye on Frontier. This could be something interesting. When the market's moving lower, this one's moving higher. Let's take a look at another sector. Consumer staples, like we said, these are outperforming. Note the difference in the chart patterns. Moves down to the 20 period moving average, which you want to see, and bounces as funds continue to accumulate these shares. CVS moving higher, Dr. Pepper, some of the retail names, Estee Lauder, Kellogg, pretty pattern. Bollinger Band squeeze. This is more than likely going to break to the upside. This is the sector I'd be focusing on personally. Kraft Foods, they're somewhat boring. Molson Coors, we talked about this early in the week, that we saw Bollinger Bands continue to expand. We saw volume. It's summertime. People drink, have parties, fire up the grill like Mikey did last week. I'm going to fire mine up shortly. Probably today, being it's Mother's Day. PepsiCo, Mead Johnson, McCormick, you need those spices. If you do ribs, you can always try Tommy Ray's sauce. He's out of Chicago, winning quite a few barbecue competitions. For you barbecuers out there, Tommy Ray's, he has a really great rub and barbecue sauce. Smuckers, looking good, building a bottom here, changing trend. You can see this is Bollinger Band squeeze. This is actually looking quite nice. Nice volume accumulation here. Not sure when. Let's take a look at Smuckers reports on 5/16. So that could be nice setup going into the week if they continue to look good. So Smuckers reports on Friday. So that's probably the best looking sector out of all of what we're looking at. Reynolds American and tobacco looking okay. Philip Morris continues to grind higher off of the 10 period and the upper Bollinger Band. About to take out recent highs here back in late December, early January. We're above a Kirby level. MACD continues to drift higher. PG, this is when we traded down here below 70, when we broke above these levels and the Kirby level here, and Keltner channel continues to point higher. We had a little bit of a topping candle on Friday, but we're not above recent highs, so that's probably just profit taking. Colgate was another name, and Clorox, which must have reported earnings, I guess, with this move down. Colgate moves down to the 20 period and moves higher. We're above previous highs. 52-week highs tend to move higher, so I'll be watching Colgate. Let's take a look at utilities, which for the most part have been doing quite well. We see some profit taking in a lot of these names on Thursday and Friday. So it's not a sector I'd probably be trading currently. Looks like there's some profits being taken as we moved higher most of 2014. Had these run-ups, and then now we're flagging out and breaking down. MACD crossed to the downside. So I'd be looking at consumer staples almost exclusively going into this week. Healthcare. Let's take a look at healthcare. See some decent names here. Becton Dickinson has built 5 white soldiers off of that recent low. Look at the volume. This one's looking quite nice. We had a TTM squeeze trigger on Friday, and really nice volume with a MACD cross to the upside. This is probably going to continue after it flags out here around the 118 level short term. So there's quite a few names on here that look decent. If you want to pause this and write down some of these names. Edwards Life Sciences, continue to move higher. MACD moving higher. Forest Labs, Humana, nice flag. Building, breaking out. MACD cross, volume, and above a Kirby. Eli Lilly, Mike, you mentioned that to me. Moving sideways, looking for this building higher off of the 50-period moving average right here where it's consolidating. This current move from December higher, you would expect this to consolidate, trade this like a base and break pattern. If it breaks to the upside off of this 61.15 level, you would trade it long, and if it breaks down, you'd trade it short. Looks more bullish to me. Again, these are components of the sectors that we've set up so we can follow each of the sectors as they are turning, breaking out, or breaking down. We can see all of the components of a particular sector and how the charts are trading. Quest Diagnostics, Stryker Corp, looking interesting. MACD cross probably continues back up. It's at the upper Bollinger Band right now, but the 200-period moving average is sloped upwards, so this looks like it could continue to move higher as Keltner channel is also pointing higher. WellPoint, looking nice. Keltner channel is definitely pointed higher. It's flagging out here. You maybe get another couple days moving sideways and a breakout of that 105 level. We could see move higher. MACD is looks like it's starting to turn. So I'd watch that as well. Let's take a look at some scans. High tight flag, see what's in this sector. We've got some energy, utilities, financial. One chart that we traded was RadNet. It built this flag here and has since broken out to the upside. Now with this particular pattern that Bukowski charted some 500 charts and analyzed where he found high tight flags where the criteria is within 60 days, the months of March through May. First, we have a move from right around $2 a share and a double, basically. Greater than 90% is one of the criteria. With respect to William O'Neill, I believe that number is 95%. So an increase of 95% in the appreciation of the price, then we build a flag and prices continue to move higher. Now with the stocks that Bukowski tracked, stocks go on to rally another 69% above the prices currently. So you can go back and look at some of those charts or buy his book, Encyclopedia of Chart Patterns, to read into that particular pattern, which is number one on the list and the reason why we have a scan for same. So let's take a look at some of the other charts in that scan. We can see Abraxas Petroleum looking pretty decent. A flag there. $3 a share up to almost $6 a share, so we have our 90% appreciation. But we need this flag to break to the upside to confirm. Auto Canada, some Canadian names showing up. Biofuel, not crazy about it. Build-A-Bear Workshop is building a flag currently. We pointed that out last week with nice volume. They beat on earnings. So we have appreciation here into a flag from 765 up to 14. Not quite 100%, but certainly right around 90%. This is building a flag now. This could break to the upside, which is what I'm expecting on this name. Pointed that out last week. Brazil, we talked about. We had a little breakout of this pattern, pull back to breakout, so we're watching this resolve coming into the week. Gold miners shares breaking a downtrend, moving sideways, could break to the upside. EMES, we pointed this one out. Nice move, continuation move higher. Now, not all of these fit the criteria of a high tight flag because we're still adjusting this scan criteria, but it does pick up some interesting charts. Goodrich Petroleum back down to the 20 period. So we have some good charts here. Kingsway Financial, we pointed out this one last week. Also trades on the Toronto Exchange. Hi, good morning. Can you watch TV? Hold on a second. Pampa Energy, we looked at this one. RadNet, we talked about. Also note the volume on Friday. Vertex Energy, building a sort of a loose flag here, but something to watch nonetheless. Let's take a look at the Bollinger Band squeeze and look at where some cyclicals here. Consumer staples, we looked at. Okay, so watch your scan here and check out some of these setups. I'm going to call it a day, being it's Mother's Day. This is Cousin Vinny coming to you from theclosingprint.com. And be sure to come check out our blog as well. Okay, I hope this helps. Take care, and we'll talk to the room on Monday.